Breaking news on Martyn Lucas Investors channel. We are looking at the new UK rules and law legislation that's being drafted for crypto. We're going to get straight into that, give you the full insight, give you the full government documents on that. That has just been released today. We've got UK set out new rules for crypto as it aligns with the US on approach. We've got the government press release. We've got the government documents here. We'll be analysing this and telling you exactly what it means for you. We've got analysis here as well. So a lot to get through. Let's start off with the news article. UK sets out new rules for crypto as it aligns with US on approach. London, April 29th, that is today. Britain will bring cryptocurrencies under compulsory regulation, Finance Minister Rachel Reeves said on Tuesday, as government signalled it will cooperate closely with the United States on the best approach towards digital assets. The new draft laws will extend existing financial regulation to companies involved in crypto, aligning Britain with the US rather than European Union, which has built rules tailored at the industry, experts say. Britain's first set of draft rules from the sector comes as US President Donald Trump has embraced crypto and vowed to roll back regulatory curbs on the industry, worrying critics. Eurozone finance ministers said last month they were concerned that US embrace could affect Eurozone monetary sovereignty and financial stability. Reeves, which is Rachel Reeves, has said that she has discussed crypto regulation with US Treasury Secretary Scott Bessent during a visit to Washington last week, and that the two countries have planned to discuss this further in June. Under new rules, crypto exchanges, dealers and agents will be brought into regulatory parameter, cracking down on bad actors while supporting legitimate innovation, the Finance Ministry has said following Rachel Reeves' announcement. Remember, we welcome regulation, but not an overreach. We don't want overreach. That's what happened to XRP. There was an overreach from the SEC. But remember, Ripple, the company, always tried to get regulation, tried to have a clear idea of what's going on, but the SEC wasn't giving it to them. We have had a lot of problems here in the UK where they're not acting fast enough. So this is our first sort of idea of what the regulation can look at. Clear rules so this is from the government website here, new crypto asset rules to drive growth and protect customers. So they are looking, this is important, we need growth as well as protection. Remember, the SEC sort of did neither. They weren't really protecting their customers and they were stifling innovation. Let's see what the UK has to offer here. If you are enjoying the video so far, please do hit the like button, subscribe if you haven't done so already. We are at 77,555 subscribers. Let's see who will be the 80th thousand subscriber. Please do hit the subscribe button. We do also have the XRP chart here, but this video is focused on the regulations. So let's see here. Firms offering services for crypto assets like Bitcoin and Ethereum will be subject to new clear rules, boosting investor confidence and driving growth through Plan for Change. At a major summit in London to mark the UK FinTech Week, the Chancellor revealed that the UK has published draft legislation for regulating crypto assets, better protecting millions across Britain. This is a very interesting stat as well for the crypto investors. Around 12% of UK adults now own or have owned crypto. 12% of UK adults. We're looking at over 6 million people here, maybe 7 to 8, up from just 4% in 2021. That is massive growth in crypto holders in the UK. But too often consumers have been left exposed to risky firms and scams. Also, massive regulation here where a major issue that I've seen a lot of people experiencing is the banks are not compliant with these exchanges, blocking transactions, blocking accounts, just simply because a person wants to buy something with their own money. So hopefully this will be addressed as well. Under new rules, crypto exchanges, dealers and agents will be brought into the regulatory parameter, cracking down on bad actors while supporting legitimate innovation. Crypto firms with with UK customers will also have to meet clear standards on transparency, consumer protection, and operational resilience, just like firms in traditional finance. You've seen now that on UK exchanges, you always have that banner on the top. You have to answer additional questions and make sure you know what you're doing when you're investing. It might be a bit over the top, maybe in my opinion. They don't ask that when you enter trading 212, for example. But that's an example of some of these regulations coming in. The Chancellor also revealed that the UK and the US will use the upcoming UK-US Financial Regulatory Working Group to continue engagement and to support the use of responsible growth and digital assets. We'll be analysing this along with this Financial Services Act, the Financial Services and Market Act 2000, Regulated Activities and Miscellaneous Provisions, Crypto Assets Order 2025. This is the official document. There's another document official here from Future Financial Services Regulation Regime for Crypto Assets, Regulated Activities. Here is the document. Are we going to analyze it? Well, no. I've given it a deep research task with ChatGPT. Let's see what it has drawn from it. And this is using all the data, and it's using a lot of power to create this for us. I do also have the simplified version at the end, so do stay with us. If you're still here, do hit that like button. Let's continue. What's happening? UK introduces clear rules for crypto assets. The UK government has just unveiled draft legislation to regulate crypto assets. That is what's happening today. This is the news we're covering. Today, they have unveiled draft legislation to regulate crypto assets, essentially bringing many crypto activities under official financial rules for the first time. Announced during UK's FinTech Week by Chancellor Rachel Reeves on 29th of April 2025, these new crypto asset rules aim to boost innovation while protecting consumers. In simple terms, if a company offers, this is the main thing that we need to take away from here. In simple terms, if a company offers services involving cryptocurrencies like Bitcoin, Ethereum to UK customers, it will have to follow similar standards and get authorization just as banks or stockbrokers do. The move is designed to crack down on fraud and bad actors in the crypto space after a rapid rise in crypto ownership in Britain. As we said, 12% of UK adults now own crypto, up from 4%. The government is essentially saying the UK is open for crypto business, but it will be closed to fraud, abuse, and instability. Importantly, these draft rules, the plan is to refine them with industry input and pass final legislation by the end of 2025. This will be coming into law by the end of 2025, but they give a clear picture of how Britain intends to regulate crypto going forward. Which crypto activities will be regulated? Crypto exchange trading and platforms. Running a platform where people buy and sell or swap crypto will require an FCA license. Overseas exchanges serving UK customers will also have to get UK authorization. The government wants any exchange dealing with UK retail investors to be brought under UK oversight. Crypto brokers dealing and lending services. If a business trades crypto assets for its own account on behalf of clients, it will be regulated. Custody, safeguarding of crypto assets. Firms that hold crypto assets for customers, custodians or wallet providers, we're talking now, will also have to be authorized and meet standards for safeguarding those assets. This includes not only regular cryptocurrencies, but also tokenized versions of traditional securities. The tokenization regime, they're thinking forward and they're bringing that into their regulation as well. The idea is to ensure that exchange or wallet providers have proper protections in place if they're holding your coins. Notably, an exchange temporarily holding an asset just to settle a trade is exempt from needing a separate custodial license so that normal trading isn't impeded. Stablecoin issuers. For the first time, issuers of stablecoins, crypto tokens pegged to fiat currency, that's what stablecoins, will be regulated in the UK. If a company issues qualifying stablecoins in the UK, it will need to be authorized. Everything is coming into the scope of the UK authorization from the FCA, it looks like. This only applies to issuers operating from the UK. For example, if an UK-based firm wants to launch a GBP pegged coin, it falls under this coin. So RLUSD, we're expecting a Great British Pound version that will be under this legislation. A lot of regulation coming in here. Hopefully it's not going to stifle innovation as long as they do it right. and don't overcomplicate things. So far, it sounds fine, but it looks the UK has a past of overcomplicating a few things. Crypto staking services. Interestingly, the draft rule even covers qualifying crypto staking. This means that if company pool uses cryptos to stake, for example, to earn rewards on proof of stake networks, including liquid staking tokens, that activity will require authorization as well. Everything is going under this. Financial promotion ads. There we go. Alongside making these activities regulated, the UK will tighten rules on crypto advertisement. Here we go again. More rules and regulations. Currently, these were temporary measures allowing registered crypto firms under anti-money laundering rules to approve their own ads. Those will be removed. Going forward, here we go. Only fully authorized firms will be able to approve or communicate crypto promotions, just like any other investment product. This change means that ads must be fair and clear, and shady operators won't be easily be able to promote to UK customers. Expect to see fewer dodgy crypto ads and more compliance with standard financial marketing rules. If you've been on public transport in London, for example, you've seen some weird adverts out there promoting weird cryptocurrencies, and they will no longer be able to act, which I guess is fine. Anti-money laundering streamlining. Currently, crypto exchanges and wallet providers in the UK have to register under money laundering regulations. Under the new regime, if they get an FCA license for the new crypto activity, they won't need a separate AML registration. So is this good or bad for crypto? Safer exchange and wallets. Reduce fraud and scams, confidence and mainstream adoption. Remember, if you do have these regulations in place, the companies will know exactly what they're in store for, exactly how to operate, and they'll feel more comfortable coming into the cryptocurrency world. Compliance burdens. These new rules won't be trivial to comply with. Firms will have to invest in compliance departments, legal advice, reporting systems, which can be costly. Smaller startups might struggle with the overhead, potentially limiting new entrants. That's always the issues with regulations. There is a risk that innovation could slow if regulations are too heavy-handed, or if big, well-resourced company can afford to comply. Some in the crypto community who favour a more decentralised, free-whelming approach will view this as the government imposing bureaucracy on a space that was meant to be an alternative finance. Fewer options. It is possible that some crypto service providers will decide to stop serving UK customers rather than going through the licensing process. So, good and bad. Let's go let's see what this part is. Surprising and odd bits in the rules. Stablecoins have not yet part of the payments regulation. NFTs are largely excluded from this bill. I'm sorry, it's not a bill. DeFi and truly decentralized activities. These rules make no special carve out for new framework for decentralized financial protocols. So I've got a summarized area at the bottom as well. What these changes mean for the average UK investor. Greater peace of mind when using exchanges or wallets. Some services may change or disappear. Stablecoins remain usable, potential new opportunities. On the brighter note, regulation could bring new opportunities for investors. For example, more traditional financial institutions might be offering crypto services once this framework is done. You can see your big banks start offering these services in the future because they know how to go about it. So, a little summary before we end the video. If you're still here with us, please do hit the like button and subscribe if you haven't done so already. What is happening? The UK is bringing crypto under official financial regulation for the first time. This means that crypto exchanges, wallets, brokers, and stablecoin issuers will now need FCA approval to operate in the UK. This is not about banning crypto, it's about making it safer for regulated investors like you and me. What is covered? Crypto exchanges, even if they're overseas, they will need UK license to serve UK users. Wallets and custodians, if they hold your coins, they'll need to follow safety rules. Stablecoin issuers launching a new GBP or USD coin from the UK, you are now under the spotlight. Crypto lending and staking platforms, these services will now be regulated even with staking. Crypto ads, no more shady promotions, only FCA authorized firms can advertise. More protection, no more Wild West. If firms mess up, the FCA can step in. There'll be more trust, safer platforms, more people comfortable investing, more growth. The UK wants to be a crypto global hub, but be a regulated one. So in the short term, it looks like it's going to stifle innovation, but then the big players will probably benefit from this. Any downsides? Some platforms might stop serving UK users if they don't want to follow the rules. Smaller projects and companies will struggle with the paperwork. And by paperwork, we mean by implementing this all in legal departments and the investment into regulation. Crypto fans might not like the crypto government oversight, but it's not aimed at stopping DeFi or self-custody, so I don't have any problem with that. NFTs aren't covered yet, so marketplaces stay unregulated for now. You can still use stablecoins like USDT or USDC, but only UK-based stablecoin issuers are affected. So if you're doing something like a GBP coin, or if you're launching USD coins from the UK, you are now under the spotlight. There will be no sudden shutdowns. Firms will get time to apply or exit market properly. So bottom line, this is good for long-term investors. This means crypto is maturing and the UK is finally putting in real rules to make safe, credible and ready for mass adoption. So there we go. That is what the news is today. We are finally getting some regulation in the UK for cryptocurrencies. This will long term is showing that crypto is here to stay, and the government is finally doing something to make it clearer regulations for the companies. So I don't think it's terrible news. We'll have to see how it plays out. We'll have to see the companies' perspective of this all. We will be covering this news, so continue to watch out on this channel. Please do subscribe. Please do watch this next video over here, and there's one down here as well for you. Until next time. Take care of yourselves and each other.